Welcome back. Well, last week in the domestic equities markets, we had quite a peculiar week of trading as the benchmark index appreciated on 3 of 5 sessions. Yet, the performance for the week was still negative as the all-share index declined about 0.4%. Well, I'm now being joined by an investment analyst with AfriInvest, Eromosele Azeba, to look at the market. And of course, Bosun Amofayo, my colleague at the Stock Exchange, will also be joining us in this conversation from our studios at the Exchange. Well, good morning, Eromosele. Thank you very much for joining us on the show.
Thank you.
Now, despite starting the week on a positive note, the gains were erased by a single day of decline. Now, can you shed more light on the major reasons for this?
Yes, so as at the start of the week, we saw the positive trend that had started in the previous week sustained on the first 2 trading days. But by Wednesday, we started to see some increased profit taking in the market. On the first 2 days, we saw major gains in some banking bellwethers, as well as gains in the industrial goods sector as well. But by Wednesday, we started to see investors take profit in the market, which is largely in line with the general trend that we have seen in the market probably since about March, April thereabout. And as a result of that, the losses that were suffered on that day completely wiped out the gains that had been recorded on the preceding 2 days. Even though by Thursday we saw the market appreciate again, but by Friday we saw another round of profit taking in these bellwethers, which ultimately dragged the weekly performance for the market into the red.
Now, generally, the performance of the market has been, quite bearish for some time. But over the past 2 weeks, we have seen some kind of positive activity in the market. Is there any new driver that could be keeping activity upbeat?
Yes. So what we've noticed is in the market now, since the earnings started to trickle in, we've seen investors react accordingly to some of the numbers that have come in. As at the start of the week, when we were seeing gains in the oil and gas sector, was largely due to appreciations in Seplat. Seplat published their results at the end of the previous week, so we started to see investors react to the results that had come out. And over the past 2 weeks, this is what has majorly been driving market performance. Well, driving or dragging, because we've seen results on both ends. We've seen some positive results from some major players in the market. We've also seen some negative results from some major players in the market. But I mean, prior to the start of the earnings season, there was no major driver there in the market to sort of push it forward. But now that we've seen results come out, we've seen investors react to this, and this has sort of kept performance positive in a manner of speaking.
Okay, you talked about, of course, the earnings, the half-year 2018 results that have come in over the past weeks. What's your view on these results vis-a-vis the general improvement in the general economy?
Yeah, I mean, on some of the numbers of some of these companies, we've actually seen positive performance. So, for instance, Nestle saw the improvements in their number, which is also a sign of increased consumer spending, which is largely tied to the improvements that we're seeing in the economy. Going down to the oil and gas space, we saw Seplat, also an upstream player, published quite impressive results, with the improvements in oil production, rallying oil prices that we've seen. The cessation of disruptions to oil installations in the Niger Delta has also improved their own numbers. But on the other part of the oil and gas space, if you're looking at the downstream sector, you can see that the players there are still suffering from a lack of action towards implementing the deregulation of the downstream sector, and it's affecting their performance negatively. Going back to the consumer goods space, we've also seen a mixed bag of performances. So I mentioned Nestle and their impressive numbers, but now looking at the brewery space, looking at Nigerian brewers' results, we saw a marginal decline in revenue, and this trickled down to profitability of the company, as well as there was also a decline in PAT. Although when it comes to the brewery sector, the reasons behind the decline are quite peculiar. You have issues around improved health consciousness from individuals as well, the availability of substitutes in the market, and changing tastes of individuals, which has also affected their numbers. But now going down to the banking space, we've seen quite a number of banks release results. Stanbic, First Bank, I think we've seen Wema, we've seen Sterling, ETI. Most of these results have been largely positive. I think the major the downside that we've seen there was from Diamond Bank's weak performance for the first half, and investors have reacted accordingly to the results. But I mean, two major results that investors will still be looking forward to, especially from the banking space, Zenith and GT, which are expected to publish their results this week, and the expectation is that it will be largely positive. So we might even see that drive market activity, especially closer to the release of the results.
Okay, so how would you relate what's happening in the political environment to what's going on, the performances we're seeing in the market, and of course some of the earnings that are being released?
Yeah, so with regards to the performance in the market, the general uncertainty that is usually characteristic of the political environment in the year leading up to elections has been seen here in our market. And considering the fact that most the foreign portfolio investors have been the major drivers of market performance historically, we've seen a lot of these FPIs raise concerns with regards to the stability of the polity, and on the back of that, we've seen reduced activity from the foreign players in the market, citing issues tied around the political environment, and this has been a drag to performance. And if you can recall, when we published our outlook report for the year, we outlined this as a major drag that could dampen market performance in the year. We already started to see that play out in the first half of the year, and as elections get closer, we expect it to become even more severe. Although, despite the negative sentiment, there's still that opportunity for investors to come into the market, especially investors who have a more long-term view on the market. When you see prices decline to certain attractive levels, then you can come into the market. But regardless of that, the stability in the political environment still remains a major concern for investors.
Okay, you did mention Zenith Bank and GT Bank. We're expecting their results. What are the other companies that are expected to release their results, and what are your expectations?
I mean, for most of the major players across other sectors, we've seen results already. We've seen the likes of Danksem in the industrial goods space. In the consumer goods space, we've also seen Nestle. We've seen Nigerian breweries. So the other major results that investors would still be expecting are largely in the banking sector. So the other tier one players, Access, UBA as well, and in line with historical trend and resilience that has constantly been demonstrated by these banks, even amidst tougher operating environments, we expect to still see a largely positive result from them.
Now, considering the fact that we saw little to no reaction, to the release of the full year 2017 and the first quarter of 2018 results earlier in the year, do you believe that the half year 2018 earnings expectations has been, a major determinant of performance, this time around? Yes,
definitely. I mean, comparing it with the periods when full year and first quarter results came out, it was a period that was characterized by a lot of profit taking, because in the prior year, we saw the massive rallies that were recorded in the market. And as a result of the fact that there was already that expectation of positive results, a lot of investors had already priced this into performance. That's why from February, we started to see some of those gains taper as investors were selling down on positions. So even with the positive results that came out, we didn't necessarily see any reaction from investors, because this had already been priced in. And as at that time, we had a lot of profit taking due to the gains that had been made in the market. But since then, we've had some sustained profit taking in the market. There was no major driver to sort of trigger a rally in the market. But with the H1 2018 results that have been coming out now, then we now have some sort of driver that could keep performance upbeat. So we've seen investors actually react to these numbers. So once the period, the earnings season ends, we don't necessarily envisage any other major trigger that could be there in the market until we possibly enter the next earnings period before we start to see any significant gains in the market.
Now, going forward, once we see this euphoria of earnings, blow away. Now, what other drivers or drags do you envisage will probably determine market performance?
Well, I feel that the major concern would still be centered on the stability in political environment, and this is expected to have a negative performance, a negative impact on the market. So that's one of the major things that we believe would determine market direction going forward, and even going into the new year. Although from the budget spending as well, we believe this could potentially have a positive impact on the market, especially in the industry, with regards to the industrial goods space, looking at capital expenditure and the likes. But by and large, the major concern for investors is still centered on political environment. All
right, Eromosele, let's cross over to the NSE. Bosun has been listening to our conversation and probably has one or two questions for you. Hello, Bosun. Good morning.
Yes, good morning.
Hello, Bosun. You've been listening to this conversation. Any words for Eromosele?
Good morning. Yeah, I think before we wrap it up, I'm interested in what his views are concerning what type of corporate earnings we're looking at for in the current week, and how this will be a major trading theme for the market. We've seen some of these earnings coming through. Some are good, some not so good. But what is his outlook on some of these earnings, and if there's any other catalyst for the market in the current week we're stepping into?
Eromosele is still in the studio. Well, Eromosele, we're talking about the outlook. Now, for you at Afri Invest, what's your stock pick, perhaps for this week?
Yeah, our major picks will still be in the banking space, especially as we're expecting results to be released from some of the major players, that the tier 1 banks, the likes of GT, Zenith, UBA, Access. Most of them are currently trading closer to their 12-month low price as well. And we envisage an opportunity for upside in these stocks, especially this week, as their results are expected to come in, which we believe will be largely positive as well.
All right, thank you very much for your time.
Thank you,
Eromosele. Eromosele Aziba is one of the investment analysts with Afri Invest. So when we come back, we'll look at the trading week as a new week begins at the NSE. To stay with us.